It is Monday, January 19th, 2026, and it is MLK Junior Day. So the markets are closed for the holiday. So there's no trading action today, but that doesn't mean that nothing is happening. Over the past few weeks, we've seen real positive momentum in the bond and mortgage markets, which has created a really, really nice dip in mortgage rates. And it's not just all hype, it's a legitimate window of opportunity. You can take a look here at the 30-year chart and see that it's come down not quite a full 0.5%, but really, really solid gains to where we're seeing really low 6%, almost a 5 here for a conventional 30 years. So that means obviously a lot lower for FHA, VA, and ARM and other kinds of products. So a legitimate window of opportunity, especially if you want to refinance out of a rate that's in the high sixes or above. It could be a really great time here to actually see real savings. And then also, if you're in or coming out of a temporary buy down where your payment is about to reset higher, another huge window of opportunity. So for many borrowers, locking in this dip can mean real monthly savings. So I do want to set some expectations, though. I've had conversations lately where people who would really benefit from a refinance at this point want to wait, see what happens, and want to see those rates to get lower, to where some people are even saying they want to see them in the low 4s or 5s. And there's no indication that those levels are going to be reality anytime soon, especially with no cost, which means points. So while it sounds great, it's not where experts realistically see the markets today. Once you factor in pricing adjustments, true lender costs, we're actually sitting right in the pocket of where most analysts expects rates to be. So how can rates go lower from here, or where could they go? The biggest driving factors are still the Federal Reserve policy and guidance, and there could be some shakeup coming with the pending Fed chair being possibly changed here in a month or two. New board members could possibly be imminent as well. We're always looking at inflation and jobs data, and then just other in general politics and fiscal policy that could very much impact bond markets and investor confidence. So around future cuts driven by data move that needle. So, and for buyers and refinancers who are prepared, it's a solid opportunity. So waiting on a perfect headline, though, those headline rates that we're looking for, that can often cost more than it saves. So if you're thinking about buying or refinancing, of the rates now is what we're looking to do. It's the time to run or send me a message. Those opportunities don't always hang around for too